There could be many different ways that investors look to approach the stock market, but in this video, I'm going to talk about day trading versus long term investing. What's going on, guys? It's Christian from Stock Hours, and today I'm going to talk about the differences between long term investing and day trading. Some of the big disparities of just the basics of the mindset of a day trader versus someone who's investing long term in shares or investing in the overall market. So, to get started, the very first difference is going to be the way you view the market. So, I'm going to show my screen really quick. So a day trader, they're going to look at charts. It's going to be one of the main tools that they use to find entries and exits, and to manage their positions. So, for example, if I'm looking at NVIDIA, I might want to take a breakout, for example, at this all-time high. But without the chart, you wouldn't even know what the all-time high is. You would have to see previous price action. So you would look at these candlesticks to determine different levels you would want to play. So technical analysis is going to be one of the main tools, if not like the number one tool for day traders. So you'll look at different key levels. You might look at supply and demand zones, consolidation ranges, trends, things like that. Some people even use indicators, but those are going to be some things that day traders are going to use is technical analysis to inform their trading decisions. Now, on the flip side, if you're looking at long-term investing, the chart, yes, it might hold some weight for what you're doing in a long-term position, but if you're holding for a 5, 10, 20-year picture, the chart might not be something you are too interested in. You might want to look at the fundamental analysis of the stock. So you would want to know what their earnings numbers are, what their financial reports say, what their future outlook might be. So you might come to here and then look at things like this. So you might want to look at their revenue year over year, or their earnings, their expenses. You would want to listen to the news. So you would want to know what CEO might say about the stock, what they have planned for the future, if they have different products that they're offering in the future to potentially grow their business more. So let's say Meta, if they're getting into AI and VR and all that stuff, that might be something that would affect the stock in the future. So if that VR or AR becomes a bigger market in the future and Meta has a big share of it, that's going to be something that a long-term investor is going to factor into their position. But basically, fundamental analysis is going to be something that's very important for the long term. If you have an unprofitable company and they're just steadily burning money every month or every quarter, whatever the case is, that's going to be something where you're going to have to factor into your longer term position. You would only really buy that company if you see it going from unprofitable to profitable in the future, based off of whatever outlook or guidance that they're giving to investors. Another thing you're going to look for in long term investing is going to be the competition. So let's say NVIDIA, they're obviously chip manufacturers, so their competition is going to be stocks like AMD, MU, SMCI, Intel, things like that. Other companies that produce chips. Obviously, NVIDIA is going to be a niche because they produce a certain type of chip versus AMD. They're going to be a different niche, but it's all generally in the same sector. So it's important to know what your company provides relative to what the competition provides, if you're investing in the long term. Now, if you're just a day trader, that almost doesn't even matter. So you might want to see how NVIDIA is performing against AMD to see which is the stronger stock. That might help you make a decision on the trade that you're looking to take, but the actual fundamentals aren't necessarily as important if you're only in a trade for like 5 to 10 minutes or even an hour or something like that. What's going to be more important is how your stock specifically is moving. The last thing that I have written for fundamental analysis for long-term investing is going to be potential laws being passed or government funding. It could obviously affect how the stock is going to perform in the future. So if the government starts backing a certain stock, that's going to obviously limit the downside that that stock has. So that's common with like war stocks and things like that. Um, so that's also something to factor in if you're looking to invest in the long term. Versus if you're day trading, it doesn't necessarily matter as much, um, depending on what type of day trader you are. Now, the next thing that's going to differ between day trading and long term investing is the instruments you use to trade. So, what I mean by that is shares versus options versus futures, things like that. So, when you're day trading, you can really use all of them, but typically, what's going to be best for you is going to be the more leveraged products. So, options or futures are typically more for day traders or maybe even swing traders, versus if you're long term investing, typically, I would say 99% of long term investors, they're going to hold shares because it's less risky. Um, some long term investors, depending on what you consider long term, might hold long term options, but it's a much smaller percentage of long term investors are going to hold options, just because the risk is going to be much higher. They can technically go to zero in the long term. So that is another instrument you can use to invest long term. But if you're talking 10, 20 years, typically those are all shares, or index funds, which is also traded in shares. So, like I said, the reason for that is because when you're day trading, you're not looking for, let's say Nvidia. You're not looking for a $500 move or $1,000 move. You're looking for maybe like a $2 to $5 move or maybe a $10 move, because you're looking to capitalize on a short term, high probability move and leverage on that move so that you can make a good percentage or dollar amount, whatever it is you're looking for, versus in the long term, you're going to hold through potentially a lot of volatility, but your mindset in the long term is that stocks generally appreciate in value the longer you hold them, depending on the company, obviously. But when you look at the overall market or index funds, they're generally all going to go up over time. So you can see if I go to like a monthly chart, let me see. Let's go to a monthly chart and let's do like 20 years. So you can see obviously over time, stocks generally appreciate in value even after we have big crashes, like for example what happened during COVID or what happened during the financial crisis in '08. So that's another difference between the two different investing styles. So let's go into the mindset of the two different players in the market. So a day trader, like I said, they're just capitalizing on high probability short term moves, and then leveraging their position on that. So going in with more risk to make more reward. Um, and another thing for a day trader is that they will allocate time for trading. So it's an active source of income. You're going to have to be here and manage your trade. You're going to have to watch how the market is moving throughout your trade. You can't just buy and go to sleep. I guess you technically can, but you'd have to have a stop loss and a profit target set before you do that. And you would have to be waiting for the right entry. So you have to be active in finding that entry, and then active in having your targets and your stop losses. Now, when you're long term investing, you can just Let's say you're working all day, you can just spend 2 minutes, buy a couple shares, go on with your day. You can buy shares later on in the day. Whatever the case is, it takes almost no time. The time that you're spending or investing into the market will be more off of fundamental analysis, understanding what your stock is, what it represents, the potential it has in the future, the growth it has, the financials behind the stock, overall economic things. So that's really where more of your time is going to go for in a longer term investor. The actual buying of shares takes no more than 10 seconds. So that's going to be a big difference, is just the time allocation for day trading versus long-term investing. A lot of people are going to approach day trading like it's a business. So they're going to have a specified edge and system. So when they get signals to take trades, they're going to execute based off that, knowing that they have, let's say, a 70% win rate. So the mindset there is much different than if you're holding long-term shares. You're more holding it like a slower appreciating asset that you just want to accumulate more and more shares of over time. So over multiple year picture, you're just going to want to accumulate to have a good size position. Now, with that being said, a lot of people in their long-term shares, they just hold it in a retirement account. So it could be like a Roth IRA or something like that. That's obviously way different of a mindset than somebody who's just day trading, who's going to be in and out of trades in 30 minutes or 10 minutes or even a couple seconds. Because you're not looking to add to your position every minute or every 5 minutes. You're looking to just execute the way that it's set up, versus a longer term investor. They might buy, let's say for example, every time you get a paycheck, you might put 5 to 10% in your retirement account, or your long term investing account, so that you can grow your account over time. So it's a much different thought process of how you would approach something like that. So that is the next difference. Let me see. Yeah. So the last thing, like I said, day traders are looking to more aggressively grow an account, or to create a additional source of income through the market, versus long-term investors aren't looking to cash out every time that they see they're up whatever percent, because they're looking for a much longer term picture. They're looking for the stock to maybe double or triple or something over time, over 5, 10, 15 years. Versus day traders, once they see a small profit target hit, they're gonna take their profits and then continue on, look for the next signal for an entry. So it's very different in the way that you're gonna take profits or even take losses on a day trading account versus a long-term investing account. So let me know in the comment section down below if you also have long-term shares along with your day trading account. And if you guys like this video, make sure you leave a like down below. I'll see you guys soon. Peace.